What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and trading method we use can be implemented when trading any publicly traded company in the U.S. stock market. Make sure you hit the like button if you enjoyed this video. It really helps the channel grow. Thanks again to those who continue to tune in and hit the thumbs up. Also, make sure you hit the subscribe button and the notification buttons as well. That way you're notified whenever we release bonus content outside of the nightly and weekend videos. Our nightly and weekend videos, like today's video or tonight's video, focuses on identifying triggers and targets for trades ranging all the way from scalps and intraday trades to swings or leap trades. So if you do want a deeper dive into exactly how we set up our charts, the color coding for the different time frames, the different levels, broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. And for more information about the strat, check out the description of this video. There's links to some free information in there as well. So while we do go over the triggers and targets in this video, I do encourage you to watch the full video, because along with the triggers and targets, we give insight into price action on all time frames. So with that, let's take a look at the agenda for today. So we'll go ahead and recap today's price action and zoom out like we normally do to look at the week, month, quarter, and year. Then we'll zoom back in to set our 4-hour markers and the triggers and targets for Thursday, October 30th, and we'll do a quick review of the triggers and targets for the week, month, quarter, and year. So let's go ahead and look at the intraday's price action today. We'll start out from the scalping perspective, and right here we've got the 5-minute chart. At the very bottom of the chart is the previous low day, 45.94. Just above that is the overnight low, around 46.79. Then we have the the previous high day at 47.61, and the overnight high at 49.58. This blue shaded area represents the gap that occurred at the open today, with the gap up. So if we zoom in a little bit more, we can see that we have the opening print, and we immediately had price action to the upside. A little bit of a pullback, but really just two inside candles, and then a further push to the upside. So no higher low above opening print to get into calls. If you're not familiar with this channel, we have a general rule when scalping in the morning. We're looking for higher lows at or above the opening print or the first trade price of the day, and we want to get into calls if we get those higher lows above or at opening print. If we get price action to the downside and we get lower highs at or underneath the opening print, then we want to get into puts. So no real trigger, at least on the 5-minute. Would have had to been down here on the 1-minute. We weren't gonna get down that low on time frame today for personally, or the way we trade here. And we have our swings for November and January and beyond, so we were just fine with taking the profit that we had here today, because we knew we had the Fed rate decision in the afternoon. So didn't really plan to trade too much unless it was a real A+ type of setup glaring at us and calling our names. So nothing really here to get in the morning. Now, as the day started to go on, we could see things kind of starting to trickle off. And let me make this bigger for those that are watching on the phone. But you could see things were starting to trickle off, right? We got the lower high on the 15-minute, but then we got a higher low. So looked like an uptrend could be starting. Because again, it was following a higher low immediately after the gap up. So you could have got into calls here as soon as price broke above this higher low candle right here, but there was not a lot of magnitude here, right? It went to this higher high, but then immediately went to a lower low, creating a broadening formation here. If we draw it in, let's go with this. So from a 15-minute time frame perspective, we'll just get the color coding right, because that way we can identify everything properly at a moment's glance, right? So if we drew the 15-minute broadening formation that was created this morning, we could see that price was gonna be within this range, right? And not a big range. The broadening formations didn't have a high or a very steep angle. So although, like I said, we get the higher low and the higher high, it did break for the lower low, creating the broadening formation, and then we just got that sideways action. Nothing really pushing either way. We did continue to bounce off the overnight high, which, to me felt more like bullish consolidation. But again, we had the rate decision and then Powell's press conference afterwards to look forward to in the afternoon. So again, didn't enter anything new, but then we did get that drop off. It was pretty quick. We did get the higher high, lower low, creating another broadening formation. Right? If we want to draw it in here, it'd be like this, right? So we could see the angles here. This is flattening out. This is steepening. That there was momentum was starting to slow down and price action starting to move to the downside. We did get the lower high right here, and if you would have entered as soon as we created the this lower high was locked in by us going below this low right here, you could have got that profit there. Now it was pretty quick, so you would have had to had your your targets ready and ready to sell, because once it did hit the bottom, it did turn back to the upside pretty quickly here. But again, we did get another lower high. So into the afternoon, things kind of tapering off. If we kind of just draw a line there, you can see how things are kind of tapering off into the afternoon. Now, we do have a lot of earnings to think about this afternoon, or this evening, or Wednesday evening, I should say, in case you're watching this Thursday morning. So we do have to take that into account, and we'll look at things in the morning when price opens up. We'll have the 4-hour markers as far as the overnight high and overnight low that we'll need to probably change. But we'll just kind of continue to look at it how we've looked at it the past few days, with these gap ups and then sideways action through the day. It's just better to be in these swings that are, at least a couple weeks out, if not a month or more out, to really allow the price action to go sideways and absorb during the day after those gap ups. So we've got quite a few gaps below. This gap obviously is a little bit lower. When we pushed into it during the Powell's press conference, it did bounce off of a pretty solid bounce point that we've talked about before. This is the 150 fib extension of the range that we traded in last week and the week before. So, although it did pull back, it bounced off of a 150 fib extension, which would signal more bullish than bearish, right? If we would have broke through it and pressed the 138.2, then we might have had more of a bearish outlook on it. But this is just not even a real pullback, right? It's just sideways action. So that's what we got from an intraday perspective. That's enough of that. Let's go ahead and look at things from the daily perspective. We see we had a doji today, so I guess indecision, you could call it, right? The bears had their chance when it pushed up. The bulls had the bulls had their chance when it pushed up. The bears had their chance when it pushed down. Neither one won that battle, so we ended up back in the middle where we opened up. Now that was a gap up from yesterday, so that would lean more to the bullish side than the bearish side. But we do want to keep in mind that we're kind of getting extended here with this push up. Now the market has just been a intraday pullback buying type of market, so signified by these gap ups. And really, if you look on the 4-hour, there's a lot of inside candles in the second 4-hour periods of the day. So here's an inside, here's an inside, here's an inside. Those are all the second 4-hour candles of that day. So we're moving up, but aren't really pulling back. Any pullbacks that we have intraday are getting bought and pressed overnight and continuing to push to the upside. So still just pretty bullish. I don't want to get too far over our skis, right? And just start buying at these highs and heavy or big large amounts of contracts or anything like that. It's better to kind of just sit and wait for a pullback entry, if not intraday, on the daily time frame, especially if you're already in swings that, like I said, expired November, December, January, and further. So, just be patient with the market. Just continue to take the unrealized gains at this point, unless you have been selling any calls that you had maybe at these highs, and just continue to monitor for any downside action. Watching, it's going to be expected. We've got all these gaps. We're pretty extended, so it would be nice to actually have a little bit of a pullback to signify a support area. Maybe this 46.79, which was the 50% of last year, 2024. So we may get that now. We're extended above the market maker's expected move high as well. Again, it's not an end-all be-all for price action. It doesn't mean price has to come back within this range, but it is of note that we're above the level that the market makers expected price to go this week. So we want to keep that in mind as well, and watch for any profit taking tomorrow, things of that nature. But we do have earnings tonight, and so we could have another gap up situation. That's what we got from the day. Let's go ahead and look at the week. Oops, that's the day again. Let's look at the week. Clean up the chart a little bit, and we're very, very nicely in a 2 up, 2 up. Thought we were going to have that bearish engulfing candle last week, but ended up bouncing just before going a red 3 or a bearish engulfing candle, and we've been pushing up ever since. I got that good hammer action on the week with the close. So the extended push, we're starting to come into these further fib extensions of this bull flag. Sorry, let me make this bigger here for those that are on phone, so we can see the bull flag that we had starting in the April lows, pushed up to July highs, and then we've got the flag here through the end of September or middle of September, right? So from that, with a flag, right? The move, the extended move, once you break from the flag, is supposed to be the length of the flagpole. So that's what we're looking for here. And you can see we've got the flag and the break above, and we've got to that 100 fib extension, had a little bit of resistance for a couple of weeks, and we broke through that. We're getting up to this 138.2 fib extension, which does kind of line up with this weekly broadening formation. So maybe expect a little bit of resistance here, but other than that weekly broadening formation, there's not a whole lot of points of resistance when we look up to where that gap is there. And if we look to the left, just make this a little bit bigger. I mean, from a weekly perspective, this is a lot of thin structure here, right? Like, we're getting towards the top of this candle, and then all of this is what some people will call it, like a fair value gap, right? So this was only traded in one direction. You didn't have a lot of back and forth direction on the way down, at least from the week perspective. So you could see another push up, get through this gap, and then back to maybe this area where we would see the maybe the reversal, and that lines up with what we see on the month and the quarter, especially on the quarter. But just looking at the month here, we have the V-shaped recovery. Trying to make this big enough for everyone to see the numbers, even if you're on your phone. Let me clean this up a little bit. There we go. So we've got this nice V-shaped recovery, and ultimately the magnitude for this move would be 70.08, which plays into the strat reversal that we're in on the quarter, right? On the quarter, we've got this 1 combo 2 down, combo 2 up, and that magnitude of that move is the high of this 3, which is 70.08 as well, right? So we've got the gap. We talked about at the top of the gap from the week perspective, that's where the fair value gap would end, and that would kind of line up with this monthly broadening formation that we see up here as well. So maybe around that 62 area is where we get some more major resistance. But until then, it looks kind of open on the larger time frames, and we can see how we've turned things around on the year, coming from the 1, 2 up, 2 down that triggered. We did make a higher low, and we've made a nice hammer, basically a solid green candle at this point with a pretty large lower wick. So signifying the bears had their chance. They tried, they pushed it down, but it got bought back up and then some. So again, we want to just continue to try and close at the top of this candle at the end of the year, that to give us the Best chance of going 2 down, 2 up. That magnitude would be 70.08. But I mean, at the rate that we're pushing, who knows if we close up here at the end of the year, that's not going to give us a lot of magnitude on the move. But, at that point, we're looking at going to all-time highs. I think 74.21 is all-time high. So we're looking at all-time highs at that point. So if you were able to, buy in on the April low, shares, options, whatever, you're looking in very good shape right now. All right, so that's our zoomed out perspective. Let's go ahead and zoom back in and set our 4-hour markers and triggers and targets for tomorrow, Thursday, October 30th. And let's bring up the scalping perspective first. Right, so currently, where's our overnight low? Oh, I don't think the overnight low has been moved. Let's just move this up for the time being to here. And we'll move this up just for the example's sake. All right, so on the chart, we have the gap, of course, that's left from Tuesday night, Wednesday morning. Previous low a day here at 48.05. Overnight low, somewhere around 48.75. Maybe that may change by the morning. And then we have the overnight high up here at 50.24 and the previous high day at 50.76. So, say we get some push up overnight due to earnings, but then by the end of the day, or by the end of the morning, the overnight traders have kind of sold that off, and we open up back. Let's say we open up right here, right? So open at 49.90. If we get price action to the upside off of the open and maybe reject off of overnight high and push back down and get a bounce and a higher low above this opening print, or even at the opening print, maybe off of this 300 fib extension here, and we get that higher low, we want to go ahead and get into calls. Now our targets are going to be overnight high and previous high day, so it's not going to give us a lot of magnitude even if we get the best of entries. So you would want to turn to the 4-hour and day triggers and targets that we'll talk about here in a second when we get to our notes. But just from a repeatable strategy perspective, that's how we're looking, right? And if we were to get this open here and a push down, maybe a bounce off the fib extension, and then a push back up, but then a rejection, at or below this opening print, we want to get into puts, and we would want to target the overnight low and previous low a day in that case, and that would give us a little bit more magnitude on the move, not a whole lot more, but that does give us still have the gap to the downside, so maybe a little bit more. If we got some momentum, we get some more price action and maybe even close that gap, right? So that's from a scalping perspective. Let's just take a look at things from a more of a intraday trading perspective, and just looking at the 4-hour candle. 4-hour chart. Looking at the candles, we had technically a one. Oops, let me get rid of this. A one. 1, 2 up, 2 down trigger today. Right, and so the magnitude of the move obviously is not obviously, if you're not familiar with the strat, when you have a 1, 2 up, 2 down, the magnitude of the move is the low of the candle to the left of the one. So the magnitude is down here at 45.94. Now, obviously, it didn't make it there. In fact, it kind of hammered up, but it did still close red. It didn't close green. So if price action does go to the downside tomorrow and we break below yesterday's low and get into that gap, that triggers a 1, 2 up, combo 2 down, and again, that magnitude of the move is the low of this 3, which is down here at 45.94. All right. Now, if we get price action to the upside and price goes above the high of the second 4-hour candle of Wednesday, October 29th, then that triggers a 2 down, 2 up. Again, not a lot of magnitude. That triggers at 50.25, and the magnitude is 50.76. So basically a 50-cent move. Not a lot, but I don't know, maybe if you load up on contracts and the money, you can get you a decent profit out of there. But at that point, I would be looking more towards the targets from the day chart perspective and the extended targets for the week perspective as well. If we were able to go 2 down, 2 up, I don't think price action would stop there if we go 2 down, 2 up on the 4-hour, right? So if let's look at the day chart. If we do go 2 down, 2 up on the 4 hour, and we go above today's high, or sorry, Wednesday's high, that triggers a 2 up continuation, triggering at the high of Wednesday, which is 50.76. And then we've got these extended targets. Now, I went ahead and put these fib extensions here, these brighter, I guess, pink fib extensions, because I just wanted to, we're up at these highs. We could, turn around at any moment if it doesn't line up perfectly with the broadening formation. That would be totally understandable because of how extended we are. So just trying to get a little bit more, a few more targets in here from like a 4 hour and day perspective. So extended targets for the day would be the 51.91 and the 54.42. But from the 4 hour perspective, it would be this 51.91 and the 53.15 as the extended targets. We get up here to this 54.42 and we start running into this daily broadening formation. It would make sense if we were to turn around at that point. Again, not saying we're going to get there tomorrow, but if by the end of the week we get there, it wouldn't surprise me if maybe Monday we get some pullback at that point. But on the reverse side, if we get the price action to the downside, that gives us a 2 up, 2 down, triggering at the low of this candle, right? So 48.05, we've got the gap acting as a magnet as well, right? So we do at least get the gap close. Now, could we bounce off of the gap close? Very possible. Just going off of the uptrend that we're in right now, we got a lot of momentum going to the upside, full time frame continuity to the upside in terms of, the day, the week, the month, the quarter, and the year are all green. So that's a very valid bounce point once we close that gap. Now, if it's going to go ahead and finish out the 2 up, 2 down reversal, then that gives us a magnitude of 45.94, the low of this candle right here. And again, that's a very valid bounce point if price action were to bounce at that point. Because of the momentum of the uptrend that we're in. It could continue for, the 2 up, 2 down, or combo 2 up, 2 down. I would at that point kind of still keep the weak flip as a possible bounce point, right? Because if price action goes below that, that flips the weak red. I think the bulls would want to use that probably as their last line of defense there. Because if we get below that, obviously the weak turns red, and we've got these other 2 gaps below there, and momentum could start to pick up to the downside. Again, it wouldn't be the end of the world. We could go all the way down to 35.97 before we create a lower low. So plenty of room for a pullback, and in some people's opinion, would be useful. That pullback would be useful, right? Especially if momentum is going to continue to the upside over the mid and long term. It gives you a better entry to continue to add to positions or to enter new positions, right? So that's what we've got all the way up through the day chart. Let's just go look at the numbers, right? So for Thursday, October 30th, there will be 41 trading days left in the year. On Wednesday, October 29th, the close price was $49.38, and we know that $45.49 makes the week red. So $4 is not a whole lot when SOXL gets to moving. It can move 10, 15, 20% in a day. So still want to keep in mind that week flip. We talked about that just a minute on the day chart, but the day flip, but to flip the month. The week flip. To flip the month, the quarter, and the year red, got to go a lot lower, right? So I don't think that those are in jeopardy at all. But just want to keep in mind, we've still got 2 days left in the week. Just want to keep in mind where that 45.49 is at. Again, the expected move for the week was plus or minus $5.38 from Friday's close. That gave us a range of 48.51 to 37.75. At 49.38, again, we're above that expected range. So, kind of have some muted expectations as to how far we continue to push higher. But again, that's not an end all be all. So, we saw basically a bounce off of that level today. From the scalping chart, we looked at, the general rule: higher lows at or above opening print, looking to get into calls; lower highs at or below opening print, looking to get into puts. But from the 4 hour chart perspective, if we go to the downside, that does trigger that 1, 2 up, combo 2 down at 48.05. Got these intermediate targets before the full magnitude, just because the magnitude is a couple dollars and we are in the face of this uptrend. So possible bounce points at 47.61, 46.70, but the magnitude of that move is 45.94, right? Now to the upside, that would give us a 2 down, 2 up. Again, not a lot of magnitude, triggering at 50.25 with a full magnitude of 50.76. So I went ahead and put the extended target of 51.91 on there as well. That's that's the 138.2 fib extension of the bull flag from April. From the day chart, we looked at to the downside, it would be a 2 up, 2 down, triggering at 48.05 with the magnitude of 45.94, which is also the magnitude of the 1 2 up combo 2 down on the 4-hour chart. And we've got these extended targets just because we've got that gap to the downside, and we could pick up some momentum to the downside. So we've got those extended targets there, including the half gap, right? We've talked about that, at least from an intraday perspective, can be a bounce point. That's basically what we bounced off today, right? We opened up with the gap up during the Powell press conference. We went down into that gap and we bounced. Although it was off of a fib extension, it did basically line up with almost a 50% of that gap that we created overnight anyway. So again, half gap levels are kind of important from an intraday perspective. If we go to the upside, again, it's no strat reversal, just a continuation of 2 up, 2 up, triggering at 50.76. So we've got our extended targets here of 51.91, 53.15, and 54.42. All right. Won't go back to the charts for the week, month, quarter, and year. We already went over those already. We are in a 2 up, 2 up on the week that triggered at 44.16. We did reach the 46.79 and the 48.79 and the 50 flat as well. Oops, I don't know why it's on there twice. And now we're looking for that 51.91 and 54.92. Right. From the month perspective, we've gone 2 up as well. That went at 35.49. Hit a couple of targets already. Actually need to cross that one out these two out as well. So again, still looking for the 51.91 and 54.42. Maybe tomorrow, if we get a big push up tomorrow, maybe gap up or a push, get big day to the upside, we'll add a couple more. Actually, we need to go ahead and add them for the month tomorrow, especially if we push up. But we may add another one to the week as well. So, but for now, 54.42 would be that level that we'd be eyeing right now for the probably the max move for the week. But again, earnings, who knows what happens. We could continue to push. Again, from the quarter perspective, we triggered that 1 combo 2 down, combo 2 up at 35.49. I'm sorry, at 36.15. The 2 down combo 2 up triggered at 35.49 and finished at 36.15. But at 36.15, the 1 combo 2 down, combo 2 up triggered. And again, we've reached a bunch of these targets, but right now we've got the 51.91, 54.42, and then we'll work a little bit tonight and get some more targets put out there, and we'll have them on the triggers and targets for tomorrow. All right. From the year perspective, we talked about how we did trigger the 1 2 up 2 down, but we've turned it around, made a higher low, got a solid green candle with a big wick on the bottom. So things are looking pretty bullish from the long-term perspective as well. But yeah, there you have it. The triggers and targets from the scalping perspective all the way up through the year. And man, we've really been pushing. I really didn't think 70.08 was going to be by the end of this year, end of this quarter, but I don't know. we might make it there by the end of the year. If we do, that would be pretty amazing, right? We've got some 2027 and 2028 contracts with we'll just say that they are already in the money. So if we reach that 70.08, shares as well. We purchased a bunch of shares on the April 7th low. It wasn't right on the April 7th low. It was day after, or 2 days after confirmation of that we'd be pushing back up. But yeah, anyways, I digress. Yeah. If you've been in, you understand, where I'm coming from. Even if you've been in for, half of the move up from April, or even the last quarter of the move up, right? It's just been, some would call it parabolic, but it's just been a major push. This is a triple leveraged ETF, so I don't throw around the parabolic too much with this, because over the years, like I said, I've seen 10, 15, 20% movements in a day, and I've seen that multiple times. And that's one of the reasons why I love trading SOXL, right? It's a very high beta ETF, underlying ETF. So those options are going to move for you as well. And got some pretty cheap premiums if you think about the delta to theta that SOXL gives you. So all a great recipe for building a sustainable profit plan, based off of one ETF. And you can, once you've got your method, locked in, you can kind of, I don't want to say put it on autopilot, but it becomes much easier, and then you can, continue to focus on the other investments that you're making, right? So, I'm kind of blabbering here, but I hope everybody enjoys today's video. If you did, make sure to give it a thumbs up. Again, it really helps us grow. We didn't think that the channel would grow as fast as it did, so we're really thankful, and we just want to continue to try and spread as much information, good information as possible to help traders out there. Again, it's a free channel. We're not selling anything. So the thumbs up is free as well, and we appreciate those thumbs up. We'll continue to do this, and as long as people watch, we'll continue to do this, and we just hope everybody has a profitable trading experience in this market, right? So if you're watching this Wednesday night, make sure you get some good rest tonight. If you're watching this Thursday morning, we hope you got some good rest last night. We hope everybody is refreshed and ready for trading on Thursday, and we look forward to seeing you out there.